Good morning, everyone. I'm Saurabh Paliwal from Biocon's Investor Relations team, and I want to welcome everyone to Biocon's Q3FY23 earnings conference call. I would like to indicate that all participants will be in the listen-only mode, and there'll be an opportunity for you to ask questions once the management commentary concludes. Should you need to raise questions, please select the raise hand icon under the reactions tabs of the Zoom application. We will call out your name and unmute your line to enable you to ask a question. While asking, please begin with your name and your organization. Please note that the chat box is disabled, but you can raise any technical concerns by sending us an email to investor.relations@biocon.com. I would like to bring to your attention that this conference call is being recorded. The recording will be available on our website within the day, and the transcript will be uploaded subsequently. Today, to discuss the company's business performance and outlook, we have Dr. Kiran Majumdar-Shaw, our Executive Chairperson, Mr. Siddharth Mittal, CEO and MD of Biocon Limited, along with other senior management personnel from business segments, including generics, biosimilars, and research services. As I move on, I want to highlight the safe harbor related to today's conference call. The comments made during the call may be forward-looking in nature, based on management's current beliefs and expectations. It must be viewed in relation to the risks that our business faces that could cause our future results, performance, or achievements to differ significantly from what is expressed or implied by such forward-looking statements. After the end of the call, if you need any further information or clarifications, please do reach out to me. Now, I would like to turn the call over to our chairperson for her opening remarks. Over to you, Kiran.
Thank you, Saurabh. Good morning, everyone. I would like to start with the national budget, which was presented by the Honorable Finance Minister on the 1st of February this year. The budget has a favorable impact on our business, especially with respect to research. While details are yet to be published, the increased focus for R&D in pharma and healthcare through centers of excellence is certainly a step in the right direction. Now, coming to the Viatris transaction, Biocon Biologics has successfully completed the acquisition of the Viatris Global Biosimilars business on the 29th of November 2022. Consequently, incremental revenues and profits post-deal closure are reflected in its earnings this quarter. Viatris continues to provide commercial and other transaction services to Biocon Biologics as a part of a pre-agreed transition services agreement. In parallel, Biocon Biologics is designing a bespoke country-specific strategy and business model that optimizes for revenues and profitability. This, we believe, will create value for all our stakeholders. We've also drawn up a comprehensive integration plan and intend to start migrating business operations in a phased manner. There are several upcoming launches, including biosimilar adalimumab in the US, making business continuity one of the key imperatives of our integration plan. Now, coming to debt reduction, I would like to take you through our debt reduction efforts. To fund the acquisition of Viatris's global biosimilars business, Biocon Biologics had made an upfront payment of $2 billion and issued $1 billion of convertible securities to Viatris. The upfront payment was funded through $1.2 billion of debt raised by Biocon Biologics, $650 million of equity infusion by Biocon Limited, and $150 million of equity infusion by Serum. Biocon Limited had raised $420 million of mezzanine financing to part fund the $650 million of equity infusion into Biocon Biologics. I am pleased to report that Biocon Limited has entered into definitive agreements with Kotak's Strategic Situations Fund for a structured funding of up to 1,200 crores. This funding, together with the recently concluded stake sale in Syngene, will help to reduce our net debt. It is important to point out that Biocon continues to maintain majority control in Syngene at 54.9% post this divestment. Furthermore, we believe the divestment achieves two key objectives: reduction of the group debt and an increased public float for Syngene. Biocon Biologics is also in discussion with private equity investors for additional fundraise to pay down its acquisition debt. I would also now like to touch upon recent concerns around regulatory inspections. The post-pandemic recommencement of facility inspections by the US FDA in India has reportedly seen a surge in the number of Form 483s issued to companies, which has caused delayed approvals across the industry. Biocon's new product approvals post pre-approval inspections have also been impacted with the issuance of complete response letters or CRLs by the agency. However, I would like to mention that Biocon has received facility and product approvals from other regulatory agencies, including EMA. With the US FDA set to resume face-to-face meetings from March, we hope that this will allow us for greater engagement to address these issues. In the meantime, we are, of course, looking at this event as an opportunity for us to upskill and advance our quality management systems so that we future-proof our quality systems. In terms of leadership update, I am pleased to share that Shreyas Kambe was appointed CEO and Managing Director of Biocon Biologics in December 2022, following the retirement of Dr. Arun Chandavakar, who will continue to serve as a non-executive, non-independent director on the board of Biocon Biologics. I would like to thank Arun for his long-standing contribution to the Biocon group, and my best wishes to Shreyas for the transformational journey ahead. I will now present the key financial highlights of the quarter. At a consolidated group level, revenues for Q3 FY23 were up 36% on a year-on-year basis at rupees 3,020 crores. Revenues from our biosimilars business and research services business delivered strong year-on-year growth of 54% and 23% respectively, and our generics business grew at a healthy 18%. Core EBITDA, which I would like to explain as EBITDA excluding R&D, licensing income, forex movement, dilution gain in Bicara, and mark-to-market movement on investments, grew 49% to rupees 1,069 crores, which indicates a very healthy core operating margin of 36% versus 33% in the same quarter last year. Growth in core EBITDA was offset by higher R&D investment at rupees 337 crores, an increase of rupees 199 crores compared to the same period last fiscal, representing 16% of revenues ex Syngene. This is a clear reflection of our advancing pipeline that will drive our future growth. We also recorded a forex loss of rupees 44 crores as compared to a gain of 19 crores during Q3 FY22. Reported EBITDA for the quarter was up 35% at rupees 723 crores versus 537 crores in the same period last year, with EBITDA margin sustained at 24%. Profit before tax and exceptional items stood at rupees 246 crores compared to 269 crores during the same quarter last fiscal. The drop in PBT is attributable to certain amortization and interest costs related to the acquisition of the Viatris business. The net profit for the quarter, excluding exceptional items, stood at 140 crores versus 187 crores in Q3 FY22. It must be mentioned that there is a part impact of stake dilution of Biocon's shareholding in both Biocon Biologics and Syngene in the consolidated results. I would like to also now turn to exceptional items during the quarter amounting to rupees 182 crores net of tax and minority interest, which primarily pertain to deal-related expenses of the Viatris transaction. And this, of course, then leads to a net loss of 42 crores this quarter. This, I would again emphasize, is a one-off event, and we expect it to return to normal from next quarter. Now coming to segmental comments, I would like to start with generics, our generics business for this quarter. The generics business delivered revenues of rupees 718 crores during the quarter, a year-on-year growth of 18%. Profit before tax for the quarter was at 72 crores versus 67 crores last year, and sequentially, revenues grew by 15%. The performance during the quarter was driven by an increase in demand for immunosuppressant APIs as well as generic formulations, especially statins, as well as recent product launches. Margins compared to previous year were muted on account of continued pricing pressure in the US market. During the quarter, we entered into agreements with Zentiva, a leading European pharmaceutical company, under which Biocon will manufacture and supply liraglutide to Zentiva for its commercialization in 30 countries across Europe. And as you know, in liraglutide, we are vertically integrated. This is a complex formulation, and it includes a drug-device combination used in the treatment and management of type 2 diabetes and obesity. Another agreement, we have also secured approvals for some of our key formulation products in Europe. And we have also entered into a long-term strategic partnership with Farmaginos in Brazil for the supply and tech transfer of immunosuppressant finished dosage formulation. And collectively, these agreements and approvals that we have received are, it's important for me to state, will actually allow us to drive that mid-teens growth for over the next 5 years and beyond. On the quality compliance front, we were issued a good manufacturing practice certificate by EDQM, the European authority, for our active pharmaceutical ingredient manufacturing facility in Bengaluru, following a GMP inspection of the site conducted in September. With respect to our Visakhapatnam project, we continue to make progress, and in terms of our greenfield immunosuppressant API facility, and in terms of new peptide facility in Bengaluru, this also is on track. We expect to complete the validation batches in both sites by H1 of FY24. Now coming to biosimilars. Biocon Biologics recorded revenues of rupees 1,507 crores with a year-on-year growth of 54%, pursuant to the closure of the Viatris acquisition and steady growth in the Biocon Biologics-led business. The revenue for Q3 FY23 includes contribution from the acquired Viatris biosimilars business effective from the date of closing of the deal on the 29th of November 2022. Previously, Biocon Biologics recognized only transfer price and profit share of biosimilars marketed by Viatris. Post completion of the deal, it now recognizes the full value of sales and associated expenses. The reported numbers therefore include 1 month profit from the acquired business and a provision for interest expense and non-cash amortization charges related to the acquisition. Core EBITDA for this business stood at 663 crores, which is up 83% year-on-year. Core EBITDA margin jumped from 38% last year to 44% this fiscal. On this, of course, was then impacted by R&D investments for the quarter, which increased to rupees 280 crores or 19% of Biocon Biologics revenues. We will see R&D investments normalize to around 12% levels of sales as we accrue full revenues from Viatris's biosimilar businesses. We continue to make very good progress on our R&D pipeline. Denosumab and ustekinumab biosimilar programs have completed recruitment for their global phase 1 and phase 3 clinical trials. And biosimilar pertuzumab has entered phase 1 trials for global markets. Viatris has initiated an interchangeability study for our biosimilar adalimumab, allowing us to maximize the commercial value of Hulio in the US. We have filed our biosimilar aflibercept in several global markets, including the US and Europe. EBITDA post the R&D and other expenses stood at 361 crores, which is up 53% year-on-year. And EBITDA margin was stable at 24%. Depreciation and amortization and interest expense for the quarter increased by 146 crores year-on-year, of which 95 crores is attributable to the Viatris acquisition. Profit before tax and exceptional items for this business stood at 102 crores. Advanced markets continues to see a strong penetration of our commercialized products, holding now double-digit shares in the US. Glargine's total prescription market share is trending around 12%, while new prescriptions are at 14%. We continue to see strong momentum in our biosimilars pegfilgrastim market share, which has crossed 11%. In Europe, our biosimilar adalimumab continues to see a strong uptake in key markets such as Germany and France, where it has 18% and 10% market share respectively. We also saw an uptick in trastuzumab market performance in Europe, achieving 17% and 20% market shares in France and Italy respectively. We continue to launch our products in new markets with biosimilar bevacizumab in Australia and biosimilar Glargine and Aspart in Canada last quarter. The emerging markets business continues to deliver strong performance underpinned by the insulin portfolio and biosimilar trastuzumab. We have expanded our reach through 8 new launches across emerging markets, and the franchise will be augmented by the integration of Viatris's emerging market territories. On the regulatory front, US FDA has accepted our CAPA plan pertaining to the pre-approval inspection of insulin Aspart in Malaysia, which was cited in the CRL. The bevacizumab CRL requires us to address the observations made during the site inspection, for which we have submitted a CAPA plan and are awaiting a response. We are confident of committing closure. We are committed to for the closure of the actions within the stimulated timeline, and we are confident of being able to resolve the asks from US FDA. In summary, the business continues to see healthy and profitable performance with several catalysts for growth, such as the launch of biosimilar adalimumab in the US. And we believe that the acquisition of Viatris's biosimilar business is a very key inflection point for Biocon Biologics as we transform into a unique leading global biosimilars enterprise, which we strongly believe will drive huge value for all our stakeholders. A comment on our novel molecules. As a part of the ongoing pivotal phase 3 clinical study of itolizumab in patients with acute graft versus host disease, enrollment continues to ramp up. There are now 45 clinical study sites up and running. Enrollment also continues in phase 1B clinical study of itolizumab for lupus nephritis, and Equilium expects to announce top-line data later this year. I think it would be prudent for me to mention that many acute GVHD studies that were being conducted by various companies have actually not succeeded, and this particular molecule is the only one showing robust data. So we hope that this will actually be a very, will hold its promise and really get approval in the foreseeable future. Patient dosing for the phase 2 trial in India for the clinical study of itolizumab in patients with ulcerative colitis began in December 2022. And based on the very encouraging and promising data in acute GVHD, Equilium recently entered into an option and purchase agreement with Ono Pharmaceutical Company Limited, Japan, where Equilium has granted Ono the exclusive right to acquire its rights to itolizumab. We believe that this is a very important event, as Ono is a very highly respected company that has brought several important molecules to the market through partners. Now coming to research services. Revenue from operations grew 23% to rupees 786 crores over the corresponding quarter last year. Reported EBITDA was up 15% to 248 crores. Profit before tax was at 140 crores, up 9% over the corresponding quarter last year. The third quarter results saw positive performance across all divisions, with solid growth in research divisions, discovery services, and dedicated centers. Development services benefited from repeat orders from existing clients, as well as an increase in the number of collaborations with emerging biopharma companies. In manufacturing services, the highlight of the quarter was the successful inspection of its biologics facilities by the US FDA, EMA, and MHRA. With good manufacturing practice certifications from the regulatory agencies in place, the company is now well positioned to fulfill its long-term contract with Zoetis and progress its biologics growth strategy. So I'd like to conclude by saying that we expect to end FY23 on a strong note with healthy growth across all our businesses. Biocon Biologics will be the key growth driver as it begins to reflect the full quarter's revenues of the newly acquired Viatris business from Q4 FY23. Directionally, Biocon Biologics will be exiting FY23 at $1 billion trajectory, excluding vaccines. Growth in FY24 will come from the launch of adalimumab in the US and continued growth in glargine, trastuzumab, and pegfilgrastim. Launches of aspart and bevacizumab in the US post-approval will provide additional upside. Biocon also is confident of delivering mid-teens growth in the coming fiscal. With this, I would like to open the floor to questions.
Thank you, Kiran. We'll take a moment for people to raise their hands to ask a question. I would request participants to please limit their questions to 2 to allow other people in the line to get an opportunity.
I think you can start, sir. There are many hands up.
We will start with Tushar Manudhane from Motilal Oswal. Tushar, please go ahead.
Yeah, thanks for the opportunity. Just on the adalimumab clarification, so we have like approval for all the strengths or a specific strength? And secondly, with respect to interchangeability, what is the kind of timeline can be expected to get the approval?
Yes, you might want to take this and.
Sure. Thanks, Kiran. Thanks for the question. We've seen that there are several players in the market. There are low strength and high strength formulation players. We have a low strength formulation that we've got. We also have a product which really checks the key boxes of being citrate free, latex free, and a device which will really be what the patient experience will be all about. So we believe that that we've got what it takes to be competitive in this market, Tushar. Another important aspect which you talked about, interchangeability, that is something that remains to be seen. We believe that that may not necessarily be a criteria to win. We do not see other biosimilars which are currently taken up in the national formularies having interchangeability at this point. Nevertheless, it's something that we will pursue, and we will have the right to win when we get our product into the market.
Interesting. So for our strength, what would be the market size?
So at this stage, if you really look at it, the market from an innovator perspective has been moved to the high concentration, but we do not see high concentration or a low concentration really being the differentiator. We've seen a similar commentary from other incumbents who've come there, other players who've also looked at bringing products. We've also seen payer acceptance from other biosimilars which have been launched. So that may not necessarily be a criteria for success, Tushar.
And maybe you should add that we have had a huge success in Europe, where we have a very, very positive patient experience, and we believe that that will translate to the US market.
Yeah, that's so true, Kiran. I think to add to what Kiran just said, Tushar, we are one of the few players who've been very successful. We've got a product launched in Europe. We've got over 18% market share in Germany alone, and we've crossed 10% in France, some of the big markets in Europe. So we've come on the back of previous success, and we're quite confident in how our product will be received when we launch it in the US.
Sure.
Matt, if you want to make any further comments.
I would just add that we're already prepping with the Viatris sales force. So we're getting ready and already getting out there and speaking to key physicians. So that process is starting. We're not waiting to be able to talk about the key elements that both Kiran and Shreya spoke about.
Interesting. That's and secondly, also, if you could share some clarity or rather visibility on the business from the vaccines segment.
Your voice is very weak, but I think if I understood you correctly, you are talking about any visibility on the vaccines business. Was that
correct?
Okay. Well, we had said that we will move past once we've got the definitive agreements done. We are in the regulatory phase right now. We've secured the approval from the Competition Commission of India. The next phase is to get the National Company Law Tribunal approvals. It requires us to get approval at Karnataka, where we are based, and also for Serum to do it in Maharashtra, where they're based. We are in the last stages at our end in Karnataka, and Serum has to move their application through the Maharashtra end as well. That's still pending.
So effectively, Q3FY24 to be the timeline to look for.
Yeah, so we have not been able to reflect the vaccine numbers this quarter, is what I can say.
And lastly, if I may, on this agreement with Zentiva, any commercial outlook or guidance on this business?
Maybe Sid, you might want to comment.
Yeah, so there is no revenue outlook I can give. All that I can say is liraglutide for us is a very important product. It is a differentiated product, and we feel we are very well placed to launch this drug along with Zentiva at the time of market formation. Zentiva has semi-exclusive rights, so we also will commercialize directly, and we feel that the total value of this opportunity will aid to the growth in the coming years.
All right. Thanks. That's it from my side. Thank you and all the best.
Thank you, Tushar. The next question will be from Cinderella Carvalho from JM Financial.
Thanks for the opportunity. I just wanted to understand the $1 billion exiting guidance that you are sharing for the Biocon Biologics. Can you please help us understand this in more detail?
Perhaps, Chini, you want to explain it, but let me start by saying that you've already seen that we are at a 1,500 crore level this fiscal for Biocon Biologics, and we expect this number when we capture the full financials of the Viatris business in Q4 to cross 2,000 crores.
Cinderella morning. Just the way Kiran put it, 2,000 crores was expected revenues for Q4, excluding vaccines. That translates to a run rate of $1 billion per annum. And then as you look into FY24, you need to add growth from the existing molecules, the big opportunity in adalimumab US, and then the addition of once we get regulatory approval for both Beva and Aspart, we would see incremental revenues coming through.
And of course, growth
Thanks for that.
Existing products.
Yeah, I mentioned.
Thanks for that. But how should we understand the facility planning? I mean, we are still receiving CRLs, and what is our mitigation?
But Cinderella, we are already selling products. Please understand that we are still marketing trastuzumab, we are marketing Clargine, and we are marketing pegfilgrastim in the US. Europe has all products being marketed. So please understand that we are looking at 2 products that need approvals, and these numbers exclude those products. We have actually factored the fact that there may be a delay in that approval. We are hoping that we will get approvals in this calendar year, which will then be incremented to that $1 billion is what we are saying. So this, excluding all those products, we are still at a $1 billion run rate, is what we want you to understand.
Yeah, so that's helpful, ma'am. Just wanted to understand in terms of where are we? I mean, what are the US FDA's requirement which is taking or creating these delays? Any color that you can help us understand?
I think I had mentioned it in my comments, saying that our CAPA plan has been accepted by the US FDA and in Malaysia. And they will, we have also provided a CAPA plan for the Bangalore facility, which I'm sure will also be accepted by US FDA. We are in the process of basically implementing that CAPA plan that US FDA has accepted in Malaysia. And maybe I will ask my colleague, I don't know whether Michael is on this call, but I will ask Michael to also add to what I'm saying.
Shreyas, you want to pitch in? Michael is not there.
Yeah, so let me just add to what Kiran just said, Cinderella. I think what is important to note is that all the facilities that we are talking about are supplying product to the United States already. So it's not something that is fundamentally wrong with it. That's the first thing that I want to state. These are also products that have been approved by EMA and continue to be commercial in several parts of the world. The way to look at it is that certainly there is a greater expectation from the agency, which we're more than happy to upgrade our standards and meet. And that's the exchange that Kiran referred to when she talked about the engagement. We have provided a comprehensive response to the agency to see how we can meet with their expectation. We've got a response back from them saying they accept our proposals. So that's why we are quite confident in Malaysia with the Aspart submissions that we made to be able to resolve it to their satisfaction. We've recently received the CRL for bevacizumab in Bangalore earlier this month. We are quite confident we will be able to get that also to the satisfaction of the agency. These are always standards that we have to work to improve upon. We look at this as an opportunity to improve and strengthen our systems. We do not see this as necessarily a lacuna overall, but an opportunity to strengthen it further. Hope that
That's very
gives you a
helpful.
sense.
Yes, Ras, that's very helpful. Just on the timeline for interchangeability and how do we expect the market formation for ADI? Any comments on that?
Specific to any product, Cinderella, that you're talking about?
ADI, adalimumab.
Yeah. So again, interchangeability is an important topic to understand how it really plays out commercially. Now, we've seen already contracting happen in the US where the first biosimilar is not an interchangeable product. And then there will be, and it's received formulary listing. So clearly it's not a condition precedent to moving forward. We've seen similar things happen on the insulin end as well. So that's the first piece, that it's not mandatory to success on the commercial side. The second piece, which is related to this, how interchangeability plays out in real life, is you can have one player who can get interchangeability approval and gets an exclusivity post-launch for a period of 12 months, which effectively means even if you were to have interchangeability approved, you would probably have to wait until that exclusivity runs out. So again, from a commercial standpoint, it would really be another contracting cycle before you can get there. I would think that interchangeability is something which is nice to have. It is something that we are confident of anyway, but it's a very US specific phenomena. We do not see that in the rest of the world. As I said before, and Kiran rightly pointed out, we've seen great success with the product with Julio adalimumab in Europe, and we're quite confident that that we'll be able to get that success. The real piece here is the patient experience and hub services, which Matt can talk to you about in more detail. But it's about our device, and we're very confident about the kind of device we are bringing to the market. It's a 2-click device, and which should really be very, very helpful for the patients. So that really gives us that right to win, Cinderella.
Yeah, thank you so much. Just one last, if I may, and that is on when do we expect consolidation from the serum side? Timeline, I'm asking, would it be Q1 or as the earlier participant highlighted, it is first half of FY24? What should we try and building in terms of our models?
Yeah, I think right now we don't have clear visibility of the regulatory completion, but yes, maybe we can look at next fiscal for those numbers to be consolidated.
Thank you so much. I'll join back the queue.
Thanks, Cinderella. Next question is from Damayanti Kerai from HSBC.
Hi, morning. Thank you for the opportunity. My question is again on adalimumab. So you have mentioned it's not mandatory for you to succeed in this market, but the interchangeability studies which you have initiated, what is the completion timeline which you are aiming for?
Damayanti, we can get you the exact dates on the interchangeability study, but as I said, it is the real dates of this would matter only after the first commercial launch of the interchangeable product, which we believe will be in July of 23. So until July of 24, even if you had an interchangeable product, it's really not going to make a difference.
And by which time I think we will have the interchangeability label. If that's your question.
Yeah, sure. And this adalimumab launch, which you're prepping for. So in the current contracting cycle, how do you see your positioning so far in view of your discussion with payers, etc.? So once you are ready to launch, so far, like how do you see your reach within these contracting cycle?
Maybe Matt, do you think you want to comment on that?
You're mute.
On mute.
Yeah, thank you. Yeah, sorry. Thank you for the question. Yeah, we are in right where we need to be in our preparation. We're speaking to key payers as well as the key to these are really 4 channels. And the first channel is speaking to the payers, and we're having great discussions as we look for the paying cycle starting in July. The next piece of this is we're having additional discussions, as I mentioned, getting out with physicians and understanding our product and the 2-click, as well as being citrate-free, latex-free, all those key attributes so they understand our product Julio. The other facet here, and we're speaking to, and we don't mention it a lot, but is key to this, is the specialty pharmacies. So we're starting those discussions with specialty pharmacies. Those are the ones that send a product to patients and act. It's not really a retail component. They act as that pharmacy to be able to get the products to the patient that the doctor has prescribed. And then Shreyash had mentioned the other key channel is really the patient services. So how do we help the patient, help the physician through the process that they're used to from the innovator? All 4 of those will be standing up. And as I said, we're having detailed discussions with key payers right now in our anticipation of our launch that will occur in July.
Thank you. My second question is on some of the launched biosimilars where you have gained notable market share, as commented by Kiran ma'am in her opening remarks. So I just want to understand how do you see pricing scenario for these products? Although like we have gained market share, but what's your view on the pricing situation right now?
Yeah, so would you like me to start and then jump in?
Yeah, why don't you go ahead, Matt, please?
Okay, great. Again, thanks for the question. We do see some of that deflation, but as far as to our models in our plan, they are aligned. And as you look at the different channels, the medical side as well as the pharmacy benefit side, on the medical side in the trastuzumab and the pegfilgrastim you're speaking about, we're seeing nice steady states in our average selling price. And this has allowed us to continue to grow share, as well as to be able to maintain that deflation that is occurring that you're seeing in the marketplace. Also, we have an extensive sales force that we're seeing great success in our commercial plans, as well as our clinical side. And I think that's attributed definitely to our sales force and the relationships we have and the understanding of our product and the pull through. So I feel we're in a very good spot based on our modeling and our plan. And also being vertically integrated, we have the staying power, as well as we have the broadness of the portfolio. When we think about oncology and the products we have there, we're in a good position to be able to compete.
Okay, so you expect market share to go up further as you push more on the commercial efforts?
We're seeing a nice trend in that continued upside in the market share, and it's showing in the NRXs, the TRXs that you can see in the IQVIA data. We're making good progress.
Sure. My last question is, what's your debt reduction goal? So obviously, effort again ongoing there, but anything say in next 6 to 1 year, how much debt you want to reduce on your books?
So, Damayanti, if you will give us a little bit of time, we are in the process of raising this debt and we would like to share it with you once the process is complete. But needless to say that we want debt at a very, very manageable and low level as much as we can get it to. So let us share this data with you as soon as we complete the debt, the equity raise.
Sure, ma'am. Thank you. I'll get back in.
Thanks, Damayanti. The next question is from Dhaval Balodia. Request you to please identify your firm.
Hello. Yes. Hello. Good morning. I have the 2 questions. First question is for most of our current biosimilar, our markets are stuck around higher single digit to the lower double digit, except for the Lantus biosimilar. So since we have now full control of sales and contracting, is there anything we will doing differently than Viatris used to do, so we can increase our market share and penetration?
Matt, you might want to answer this.
I had a little hard time understanding, but I believe
No,
it was
basically,
around.
I think the
Oh, sorry.
question
Yeah.
being asked is, are we going to do something different to what Viatris
Ah,
is doing to market
okay.
and get better market penetration? And the answer is yes, because
Yes.
let me start the comments by saying that we are looking at dedicated sales efforts for biosimilars, but I'll leave it to Matt to add to this.
Yes, Kieran, absolutely. We are doing more, and we're seeing the opportunities, particularly in additional customers in the conversation that we're having. As we mentioned in previous calls, a lot of this is that we have 100% focus, and we have some great opportunities as we look at not only the payer side, but the retail pull through, our ability to talk to physicians, and the integration is going well. And we're continue to see that progressing, as well as being able to talk to new customers, especially as we look at the vertical integration that we have at Biocon Biologics.
Okay, thank you. And second question is, majority.
It is not a seizure, because that's a separate.
Yeah, sorry. My second question is, since most of our new biosimilar like Avastin and Humira, we may be the fourth or fifth player in the market versus first or second, in case of the Neulasta and Herceptin. So we have any particular strategy, since we are fourth or fifth player, to address, to come with any particular strategy? And the second thing, Humira has a wide use, like it's a dermatological product, it's a gastro product, it's a autoimmune disease product. And most of our biosimilar product is only the oncology. So we have the separate sales staff for the Humira or any other thing we are doing for that.
Shreyas, would you like me to start and then chime in?
Yeah.
Great. So let's start with our product, Julio. We are going to be in that, what I would call the first wave. Amgen did launch here over the last month or so. But in that first wave, as you know, there's no one going to be exclusive. So we have a tremendous opportunity to be part of each one of those formularies. Each of the payers has said that they will have at least a biosimilar +1 or +2. And we'll be in that first wave and have our plans to be able to participate and win with those payers. So being exactly a little bit later than Amgen is not, in my opinion, a hurdle, because the way the payers have opened this up, and we're well positioned to win these formulary positions. And then we're also, as I mentioned, we're in a good position after winning the formulary with the sales force that we have coming from Viatris and adding to it. We have that ability to pull through. And then we also have a great understanding of the specialty pharmacy. And the specialty pharmacy, as I mentioned, is how the products are dispensed. And then we're in the process of continue to stand up and add additional patient services to what we're developing with Viatris, to be able to have the patients have those discount copays, or the ability for them to get additional services. So we're in a good position with our Julio product. As Shreyas and Kieran also mentioned, we have history. A lot of our competition doesn't have history. We have global history and market leadership in Germany and France to be able to talk about, as well as our product has that 2-click mechanism. And we mentioned that it also is citrate-free, which won't cause any pain at an injection site. As it relates to, I believe you're asking about the oncology products. We are well established in our sales force, as well as our relationships with key physicians. So as we launch products, even though we're not first, which ideally we would love to be first, we have that mechanism and the understanding of how that medical benefit works, and to be able to pull that through on the oncology side with our sales force, as well as our payer, as well as our ASP understanding of how the industry works.
And I might remind Mr. Bhalodia that Biocon was the company that received the first US FDA approval for trastuzumab or biosimilar Herceptin.
Yes, ma'am. Yes. Thank you so much. And all the best for the whole year.
Thanks.
Thank you, Mr. Bhaloria. We move on to Harith Ahmed from Spark Vendors. Please go ahead.
Hi, good morning, and thanks for the opportunity. You previously guided for a $1.8 billion revenue for Biocon Biologics in FY24 and a $500 million EBITDA. So are we maintaining that guidance given there's some delay in the closure of the transaction with Serum?
Maybe Chini, you would like to respond to this, but basically, I think we will be focused on these numbers that the market has, that we have shared with the market, and we will basically look at, as you know, there have been delayed approvals of Aspart and bevacizumab. We are also trying to catch up with that particular gap. But we are looking at how to basically stick to these numbers. Of course, this does include, as you know, $300 million of vaccine revenues. So I think we will be looking at all these numbers and making sure that we share with you any changes to these numbers. There's also been an impact, I think, of the currency, parity between the dollar and euro and dollar and yen. So I think that also has impacted some of these numbers, but we're trying to see how close we can get to those numbers.
Got it, ma'am. My second question is on the R&D spend at Biocon Biologics specifically. We've seen a almost 100 crore delta on a quarter-on-quarter basis, and this with just a month of consolidation of the acquired business. So how should we think about the spend for next year? Do we still maintain that 12 to 15% of revenues guidance that we've given in the past on the much higher revenue base? Is that how we should think about it?
I think that's what I meant by saying that we will see normalization, because this quarter you've only seen the impact of a month's contribution from the Viatris business. But going forward, we expect to basically normalize R&D spends to that sort of 12 to 15% levels.
Thank you. And last one, with your permission, Siddharth, there's a increase in the share of loss from JVs and associates, and we were under the impression that given that we've lowered the stake in Bicara, this number would be trending down. We've seen an increase on a quarter-on-quarter basis. So how should we think about this number going forward? Is this a one-off quarter for that particular line item?
So I won't call it as a one-off. Our shareholding is down to 55%, and the expenses of Bicara has gone up as they are in middle of clinical trial, and of course the advancement of the lead program. And we do expect over the next few months further fundraise by Bicara, which will further dilute our stake. But on an absolute number, which we are treating as a loss from associate, shouldn't materially change, because as they progress in clinic, the expenses would go up. They're also spending money on their pipeline, the follow-on pipeline. Of course, that's at a very early stages. The expenses will not be significant. But from your model perspective, I do expect something in the similar range over the next few quarters.
Got it. That's all from my side. Thanks for taking my questions.
Thank you, Harith. Next question is from Surya Patra from Phillip Capital.
Yeah, thanks for this opportunity. First question is, or a couple of questions rather, about to understand better the integration of Viatris operation. So in fact, what we believe that, okay, with this acquisition of Viatris biosimilar operation, we have seen vertical integration, and theoretically that should have supported gross margin sequentially. But we are not seeing any change. this quarter, although this is not a reflection of a full quarter performance of the acquired operation. But is it fair to believe that the gross margin should see a kind of sequential up move post integration? That is one. Secondly, wanted to understand a bit more on the distribution charges, what we are paying to Mylan, in which line item that is getting captured, whether it is.
You're muted.
I'm audible?
Yeah.
Yeah. So, okay, sorry for that. Then I'll repeat my question. So about the integration, some clarity I wanted. So theoretically, with the acquisition of the Viatris operation, that provides more integrated activity now, and hence the gross margin should have seen sequential improvement. But this quarter, we are not seeing anything like that. It is slightly lower only sequentially. So can you give some clarity about should we see and expect a sequential improvement in the gross margins after the integration?
Can I take that?
Yeah, please.
Surya, can I just clarify gross margin? You mean net of material cost or the
Yes,
core
sir.
EBITDA, which is net of all operating costs?
No, net of material cost.
Yeah, net of material cost at the BBA level, we've seen that improvement this quarter. It improved by 2 percentage points over the last quarter, not 200 points.
Okay. So then possibly at the Biocon consolidated level, it would be pricing challenges or whatever that we would be seeing. That could be one reason. Is that the understanding correct?
Siddharth, you want to take this?
Maybe Indranil, you can just
explain. It's not so much of pricing, but it's also about product mix. So you'll see a quarter-on-quarter flux because of product mix. This should normalize going forward.
Okay.
Yeah, if I may just comment, Surya, really look at the core EBITDA performance, not so much around gross margins. And
sure,
for Biocon Biologics, it's at 44% improvement over last quarter.
Okay, so now sir, practically including the R&D spend, why? Because that is an integral part of our business, and in the next couple of year time, we are likely to see a upward move only, absolute upward number in terms of R&D spend. So the overall margin profile of Biocon Biologic, how should we see, considering also the integration of the acquired operation?
The SG&A cost that will come through post-acquisition, or the full effect of the SG&A cost, is absorbed in when we report our core EBITDA. And as I indicated, we're now trending above 40% this quarter and the previous quarter. So we see the overall SG&A cost being comfortably. Kiran did mention that we're looking at bringing R&D cost down to about 12%. So you would see EBITDA now then trending towards the high 20s, nearing 30 from a margin profile, if that was your question.
Okay, yeah. So
and that's an improvement, as you can see.
Okay, just last question. Let's say for the biosimilar business. So obviously the key product opportunities what we are having for, let's say, for FY24 is Viva, Aspart, Adali, as well as the RH insulin, I believe. So how should we think, given the kind of a timeline that is there and the regulatory clearance that we are waiting for? So, and the contractual cycle also, that is, considering all that, whether these are considered to be the real FY25 triggers for us to grow?
So let me answer you, Surya, by saying that FY24 certainly is going to be focused on the successful adalimumab launch. And I think we are also looking to see how much we can grow our existing products like Glargine, trastuzumab and pegfilgrastim in the US, but also we are focused on making sure that we focus on Europe for all the products that are approved there. As you know, in Europe, we have all products approved. In fact, we have 7 products approved in Europe, of which the real focus up until now has been just, not all 7. So we are looking at seeing how we can basically leverage and add, to the business in terms of all products in Europe. So I think that's the way we look at the FY24, and of course we're hoping that Aspart and bevacizumab will also be approved this calendar year. In which case, obviously, there is some contribution to the FY24 growth. But FY25 growth will see all these products contributing to strong growth.
Sure, ma'am. So just one on the pipeline front, this what is our now progress on the aflibercept front, Elia, and what is the timeline that we are expecting given the kind of regulatory progress and our preparedness and our positioning compared to competition, that front? And also briefly on the generic business front, so although we are this year possibly will likely to see a couple of greenfield projects contributing, but in terms of the growth visibility for that segment, how should one really build into the model?
Shreyas, you want to take this?
Yeah, sure. Thanks, Kiran. On the aflibercept asset, Surya, as you know, we've exercised the option from when we acquired the asset from Viatris. So it's a first to file asset. It's undergone review with the FDA, and at this stage, we are currently in litigation with the originator of that product. So clearly that's in the public domain. It's going through that entire patent dance cycle. So we will not comment on the proceedings beyond what's in the public domain. So clearly that's an area where we are leading that effort directly. We believe aflibercept is a sizable opportunity, gets us into the ophthalmology space, and we can talk to you more about how we are going about doing it. But we believe that it would be a nice area for us to build on. Being the first to file does give us the opportunity to look at such a sizable asset, almost $10 billion in revenues. So this could be something which can really be another game changer for us going forward. So we are really focused on developing that. On the second question that you'd asked, I'll turn it over to Sid to respond.
Thanks, Shreyas. And Surya, so I think Kiran mentioned in her opening remarks that our immunosuppressant facility is undergoing qualification. Also, the peptide facility is undergoing qualification, and we expect the qualification to complete in first half of next fiscal, following which we will, of course, file with the FDA to include those sites in our DMF and the ANDA, and it would take some time because we expect FDA to come and inspect these facilities. So the revenues from these facilities are not expected to commence until FY25. However, the growth will come from the other products, what we have already commercialized, some of the new launches which we are expecting in the US. I'm talking about the generic formulation launches, and also additional capacities in our existing facilities that we had increased in the last 12 to 24 months, which will drive volume increase for our API business. So combination of new launches, increased contracts that we've seen recently for statins and immunosuppressants in the US, and increased API should drive the mid-teen growth for the next couple of years.
Sure, sir. Yeah, thank you. Wish you all the best.
Thank you.
Thanks, Surya. Next question is from Shyam Srinivasan from Goldman Sachs.
Hi, thank you for taking my question, and good morning, everyone. Just the first one on the $1 billion run rate again. Chini, if you could kind of break it down into, developed market and emerging market. I remember, historically, I think emerging market did about 240 million for us. So just where it is tracking now in that 1 billion number.
So of course, even from the Viatris biosimilar acquisition, we will have emerging markets in there. So directionally, as you look forward, 70% of our revenues would come from 30% from emerging markets. Now, Shyam, that is part of your question. Now, if you're going back to the building blocks for the $1 billion and from there on, so in the $1 billion, you'd roughly have about 25% in the emerging markets. But as we look ahead, you will start to see advanced markets pick up to 70% and emerging markets at 30%.
Got it. So you seem to suggest that the emerging markets will grow faster, right? Once the 25% today, sorry, did I get those numbers wrong?
Yeah, okay, so we had this business that's up to last quarter. As you think, we were up roughly 50-50. This quarter, as we get to 2,000 crores, we will actually go to 75-25 with advanced markets. But as we build on the emerging markets, we'll finally come out at 70-30.
Got it. And Chini, when we look at the margins for these two, segments, is it different, or you don't calculate it that way given the infrastructure could be common? So just help us understand, does splitting this based on these two geographical spreads, does it make sense, or it's one large monolith that we need to actually look at it?
From a operating cost structure, it is a large monolith because the manufacturing plants supply both the emerging markets and the advanced markets. From a SG&A point of view, the Viatris acquisition will increase the SG&A cost, which is pertaining to the advanced markets. But as you'd expect, advanced markets has a higher revenue profile, a margin and pricing, and effectively a higher margin.
Helpful, Chini. My second question is to Shreyas. I think you briefly touched about Hulio interchangeability, but what about Resvoglar, right? Which Lilly, I think, has got an approval recently. I think your exclusivity ends in December, if I recollect right, but correct me. So do you expect, 13-14% NRX share? Are we still on track to do the high teens market share by the end of this calendar year? And is there any competitive activity even beyond Lilly that you think we need to be monitoring?
Yeah, no, thanks, Shyam. I think let's first look at where this is coming from. I think this whole question on interchangeability was about breaking that myth about being able to not just have a biosimilar product, but given that insulin is a chronic therapy, can the patient who's receiving the dose using an innovator product get the same the numbers on the pen that they would see? Would it be the same, or would there be a difference? And then could it be used exactly interchangeably? So I think that entire effort was to go past that hurdle and break the myth that there is any concern at all about this. And I think FDA themselves called it a historic moment in how they approved Biocon Biologics Semglee as the first interchangeable product. So it needs to be viewed in that lens first, Shyam, to say that why was it needed at that point in time to put at rest all arguments that not only is it biosimilar, but it can be interchangeably used. Whatever it is that has been prescribed, you can switch it or sub it at the pharmacy level and you will get the same therapeutic effect. I think that is what we achieved over the course of calendar 22. Before we got the interchangeable insulin, of course, there was Basaglar in the market, and there was this increased market share that they had got vis-a-vis Lantus, and that was there in the public domain. The question was about whether Biocon Biologics and Viatris, when we brought our product, could do that. We were able to successfully demonstrate that, even going past the regulatory hurdle of being an interchangeable biosimilar and the first one at that. Going forward, what we really see, and you're seeing that in the indices that you mentioned, which is the NRXs, are already trending towards 14% and thereabouts, clearly indicated the acceptance of the product. And now you'll of course expect competitor action. You'll also expect some innovator action. But from here on, it's you laid to rest the argument about efficacy, about overall effectiveness, immunogenicity. All of that is behind you, and now it's a level playing field to go and win the market share. So clearly, 23 is about building on all of this and seeing how we can not only grow market shares, get the pull-throughs that Matt talked about in existing formularies, but also winning more accounts to see that we grow that confidence beyond what we've got. So I hope that gives you a perspective of how we are approaching Glargine overall.
Got it. Thank you. And my last question is to Siddharth.
Sorry.
Yeah, go ahead, Chini.
It wrongly classified certain markets, particularly JANs, Japan, Australia, New Zealand, and Canada. So if we really look at it, today we are at roughly between 60 to 65% advanced markets. And that would go towards the 70-75%, particularly with the Adali launch and the launch of the new molecules.
That's helpful. Chini, last question to Siddharth, quickly, if I may. The confidence for mid-teens growth, I think, and maybe I clarify here, we are only talking mid-teens growth for generics, right? Because every other segment, I think Syngene has their own guidance. I'm assuming, and Biocon Biologics has its own guidance, looks like. So the mid-teens, we are referring to only generics. That is question number one. And two, what has given us the confidence for this mid-teens growth? I know this quarter we have done 18%. We've grown QOQ also, but you mentioned in the opening remarks about even generic pricing pressure. So what's changed that has given us a little bit better visibility? Is it just the launch momentum from our products?
Yeah, so it's correct that the mid-teen growth is only for the generics business. And the confidence is basis two things, as I mentioned. One is we have already got certain additional volumes in the US for the formulations we have launched, and we are going to launch additional products in the coming fiscal. We do have a couple of important launches coming up later part of this fiscal itself. We know that generic teriflunomide, which is a first to launch opportunity, even though it's a competitive market with many players, but we are going to be one amongst others. And we do have a few other filings which were done where we are awaiting FDA approval in the next fiscal. So that would drive growth in the US. But yes, I did mention the pricing pressure does continue. We have seen normalization of pricing pressure more recently with some disruption in the US and supply chain caused by some of these facility issues from other Indian companies. So what was a steeper price erosion last year, we are seeing normalizing trend. And I also mentioned that we are expecting additional volumes to come in from our API business, where we had expanded capacities in our existing facilities. And there were a couple of, again, important molecules which were launched by our partners in Europe, specifically the later half of this calendar year and 22 calendar year, and that will drive additional volumes in fiscal 24.
Thank you, Siddharth, and all the best.
Thank you.
Thanks, Shyam. Next question from Nithya from Bernstein.
Thank you. So on aflibercept, can you tell us what your TAD date is? I think Beatrice had communicated that it's more than 3 quarters since they said they filed the product. Second, would you have already worked with the regulatory agency to ask for a switching study waiver for this product? Obviously on the back of what happened with the Lucentis biosimilar.
So just a quick thing, I didn't follow the second question, Nithya, very well, but for the first one, given that Beatrice was the first to file, will be not just linked to market formation on the market formation will be linked not just to patent expiry on the molecule, but also the data exclusivity. So that runs beyond the patent expiry into 24. So we will be watching that date, and that will be the date that the FDA can grant you approval. So technically, they can't grant an approval until the end of data exclusivity.
Understood. So my second question was, Coherus actually was able to get interchangeability for their Lucentis biosimilar on the back of the immune privilege argument. Have you also made a similar request with the FDA, or is this something you will do later? Just thoughts around that.
Yeah, I think you'll grant us that for competitive reasons, we would not want to share that discussion right now, but clearly Lucentis is a precedent for most companies to follow at this stage.
All right. So one on adalimumab, Shrihas, I think interchangeability has actually made a difference. It's made a difference for you in Glargine. It's making a difference for Coherus in ranibizumab, even though it's a medical benefit product. So I'm just surprised with your commentary that you don't see that as an important factor. But come, let's say, July 2024, you will have, there are at least 4 of your competitors who are going after interchangeability for the 80 mg version. So in that scenario, how do you see a 40 mg product as being competitive?
Fair question, and we could argue it several different ways. First thing I will point you out to the success that we've enjoyed and are limited right now to adalimumab in Europe, where we've seen success regardless of whether you had or didn't have interchangeability. So that's one point just to look at. The next thing to see and classify the US market also for adalimumab, you're seeing the first product being put on the formularies, not having interchangeability, clearly not a condition precedent to being listed on the formulary. So that is the second piece that I would point you to. Point number 3, you would have almost 5 of us launching on, I would say, effectively the second wave of launch or the first wave of real launch after the first innovator. So not everyone, actually other than one company, will have, nobody else will have interchangeability. And almost every payer in the US has publicly stated that they would have at least an N of 2, if not N of 3, which means the signal is that it's important to have and nice to have an interchangeable product. Certainly, gives you the advantage. Nobody's saying you shouldn't have it, but it's not going to be the sole determinant of commercial success. I think that was the context to my comment. If it led you to believe anything different, then I would like to correct myself there.
Thanks, Shrihas. Just to follow up on the fact that formularies are actually not restricted and they're fairly open in terms of the number of biosimilars they're adding. So if, let's say, there are 2 or 3 biosimilars at parity with Humira, which is the sense we are getting from some of the payers' commentary, then does your commercial muscle therefore become more important? If there are 2 biosimilars and Humira at the same out-of-pocket expense level, what will help you differentiate yourself?
Yeah, and I'll let Matt respond to this in a little more detail, because I think there's a lot of questions around this. But I think the first piece is the getting onto the discussion. What gets you to the table is price. Interchangeability, as we discussed just now, is something which is a nice to have. But what will determine success and pull through is going to be the device that you have, whether it is the citrate-free, latex-free product that will reduce injection site reactions, and how are you going to be able to provide patient services so that you do not have a pushback from the patient to the payer or the prescriber that they're not comfortable, given that they've got so many options now. I let also Matt talk about the specialty pharmacy piece, because given that you've got so many options in the US now, there's an opportunity that you can get subbed even if you were to get prescribed. But I'll let Matt, maybe Matt, you can comment and give it a little more color on this.
Yeah, Shrihas, you explained it very well. I'll just add a few other key attributes to that. one thing too, remember interchangeability is only to the innovator. And we're watching very closely how that shapes up. And you are correct in your comment that it is an important piece of the commercial side to be able to have those relationships, have the doctor understand the product itself and what we have in our Julio product. When they write that name of Julio on there, it's in a great position for us. And I don't want to underestimate, there is a lot that we have to understand, which we are. And there's a key component of this that's a little different than what we've seen prior, and that is the specialty pharmacy. And so there are relationships that we are growing, establishing, and understanding the economics there as well. So we're not subbed at that pharmacy, specialty pharmacy level. So I'll reiterate the 4 key components of winning in Julio is definitely getting the economics right on the payer side, understanding the ability for the sales force to create those relationships, have the physicians and patients comfortable with our Julio product in the 2 clicks and the other attributes. Thirdly, is to making sure we understand and develop and continue to work with specialty pharmacy. And at the end of this, if you aren't standing up, which we are, the right patient services to be able to support the physician, as well as to be able to support the patient, then we'll see people fall down. And as we go through these, we have a great understanding, especially what Viatris has already built. And we're adding to that for that growth to be able to be very competitive, whether it's interchangeable or not interchangeable, as we think of the different channels that we have to be successful.
Sorry, thank you for that. I just went on mute. One last quick one, if I may, on the SII deal. I think your guidance was $300 million revenues, and that was in the context of COVID vaccines at a $3 to $4 pricing. Now we know that the COVID vaccine demand has come off, so I'm assuming you'll be selling a different set of products. That being the case, does the margin guidance of 35% EBITDA still stand on the 300 million revenue?
Well, that is the agreement that we have, Nitya. So I don't think there would be any change to those.
Got it. Thank you so much.
Thanks, Nitya. Next in line, Samir Besiwala from Morgan Stanley.
Hi, thank you and good morning, everyone. Siddharth, can you just talk about your positioning on liraglutide in the US market? And second is, when you see the market formation in both US and Europe?
So thanks, Samir. I think very good question. And I would like to first emphasize our focus on peptides as a company. We see a huge opportunity in peptide. I mean, today the peptide market is almost growing to a $15 billion in sales globally. And we expect by 2035, this to be a $60 billion opportunity in sales. And I'm talking about 3 or 4 key peptides, whether it's semaglutide, liraglutide, or tirzepatide. And we are very uniquely positioned. We have already done the filing in the US. We have received our comments from the FDA, and we are working on addressing the questions that FDA has. And we expect to hear back from FDA soon. But the market formation, as it's publicly known, there are a couple of settlements for launch in the US for Victoza, which is the diabetes indication. There's been no settlement yet. For Saxenda, which is for weight loss and growing steadily. But from whatever at least available in public domain, we've heard that the launch is expected in end of 24/early 25. We are still under litigation with Novo Nordisk, so Biocon has not yet settled, but we expect to be in the market, as I mentioned, end of calendar 24, early 25. Now, from a competitive positioning perspective, we have seen a couple of other generic companies file this drug starting with 2016, and there have been a couple of filings in late 2018, 2019, and 21, and none of the competitors have received approval. And we believe that we are very well positioned with the scientific data that we have provided to the FDA.
Okay, great. And you have filed for both Victoza and Saxenda.
That's correct. We have filed for both Victoza and Saxenda.
And what's the market formation date in Europe?
Europe is around the same time period, end 24, early 25.
Okay. And broadly for other peptides, have you done the filings or what would be the flow as you go forward?
So semaglutide, which is the follow-on molecule for liraglutide, is under development. We've, of course, late to be NC-1 filer, but we do expect to file in time to be in the market on 181 day for semaglutide. Of course, there are 3 different formulations for semaglutide with the market opening up starting 29-30. And the market, for some of the formulations going as late as 32. The other drug that we are working on, and again at different stages of development, is terzapatide. As we know, this is expected to be a wonder drug, contributing almost 25 to 30 billion in sales. And we are targeting to file this product as a day one NC-1 date. So there's a lot of effort going on. We have a very robust pipeline of peptides. I just discussed 3, but we have a pipeline of peptide which is more than 10 numbers, and it's again at different stages of development. And we are adding incremental capacities to our peptide API manufacturing facilities. So what we mentioned at the beginning of the call, the large volume peptide facilities commission, the validation is going to start. And we are already looking at doubling the capacity of that facility in the next 12 months, because we see a huge opportunity in the volume growing globally for peptides.
Okay, great. And have you filed any other peptide other than Lira?
Not yet.
Okay. And you'll be doing third-party API sales as well, and you think that will be a big opportunity. That's what
Yes, that would be a huge opportunity. In fact, we have seen some of the early filers in the US, they had got their API from the peptide specialist companies. And the main concern that FDA had was on the characterization of the API and the quality of the data which supported the API. And we've been in discussions with some of these filers to qualify our API as source in their file. And we have seen very encouraging results when we have supplied them quantity to help them with the analysis. And they, of course, have a comparison of our API with the other API. And we feel we are very well positioned in terms of the quality of our API.
Sorry, have you crossed that bar with FDA with your API, or?
We have received comments from FDA asking for certain questions on our API, and we are in the process of addressing those questions, and we think most of the questions are addressable. We do not see any showstopper in our API quality in terms of the questions that the FDA has asked.
Okay, great. Thank you so much. One final from my side, it's on BBL. Kiran, what's the plan for private equity raise? I think you did mention a bit about it, but anything concrete over there, and the subsequent IPO that you were thinking of?
Yeah, so Samir, obviously we are in advanced discussions with private equity investors, and as I mentioned, we will be sharing that information with you with more clarity and granularity the moment we are close to signing up, because I think it's not right of me to really talk about that at this stage. But suffice to say that we are in advanced discussions for equity raise to lower the debt, acquisition debt. The other point is that
the IPO.
As far as the IPO is concerned, we are obviously focused on the right timing of the IPO, and it will be based on a number of triggers. So we will be looking at some of these triggers in terms of either product approvals, market performance, and those will really determine the timing of the IPO. Because the moment we start seeing robust growth, I think that is the time for us to go to the market.
Okay, great. Kiran, if I may,
And in any case, Samir, as you know, we do need to go through the integration process before we can initiate any IPO activity. So I think from that point of view, I would like to focus on integration and then start the IPO preparations immediately thereafter.
So looks like 18 months or thereabouts.
Yeah, it could be sooner, but definitely not earlier than 12 months.
Okay, and Kiran, if I may, the valuation benchmark which have been set for BBL based on the previous rounds of private equity and the conversion for Viatris, those stand. That is a benchmark for the new rounds of infusion.
Well, what I would like to comment is to say that definitely the IPO valuation stands as has been discussed for the Viatris transaction. That absolutely stands, and we will be raising funding based on how things play out in the market.
Okay, great. Thank you so much.
Thanks, Mir. Next is Neha Manpuria from Bank of America.
Yeah, thanks for taking my question. Shreyas, could you give us some color on the filing timeline for ustekinumab, Deno, and pertuzumab, since we have started trial for that one too?
Sure, now. So we are right now in a phase 1, phase 3 trial for ustekinumab. We've guided earlier that N23 we should be able to get to filing. For denosumab, we've got Prolia and Xgeva. We again are doing a combined phase 1 and 3 trial. We're looking at an N24 filing for denosumab. And since you asked about pertuzumab, we've just announced that we've gotten into the clinic for a phase 1 study that we've started with that asset. And as we progress more into that, we will be able to give you more clarity on the filing dates.
Yeah, sorry about that. And on the emerging market piece, based on the 35-40% that it's contributing currently, what's the expectation of growth given the amount of launches for Trastuzumab and the insulin portfolio that we are making there? Would the emerging market piece, including the Viatris portfolio, grow mid-teens, high teens? What is the expectation there? Or not emerging market, ROW, ex-US, Europe rather.
Sushil, do you want to comment on that?
Yeah, sure. Along with Viatris, both of us put together, the growth would be in the range which you have mentioned. Overall, the good thing which will happen right now is between both of us in the past, Viatris and us, we had strengths in different areas. We were stronger in the partner driven insulin market area. And Viatris is very strong with their Trastuzumab and Beva portfolio. And they also had foot in the ground in different markets. So both together, I believe that the growth would be quite significant in the emerging countries. And we will continue to do well as we are doing. The key focus of the emerging countries will remain what it always has been. We want to create access in more number of countries, and we want to go deeper in the countries where we are already present. So I think with the Viatris portfolio and the existing portfolio that we'll have, the growth will be around the numbers which you mentioned.
So just to add to what Sushil said, Neha, we continue to see significant growth in what we've called as the BBL markets in the past, where we were structured prior to the closure of the acquisition, and that trend continues. It of course gets better with the Viatris additions to the markets that we've been leading so far. But the question, if you were to now look at what has become Biocon Biologics, is now a much sizable pie, which has a larger contribution from advanced markets than we had before. So as a percentage, you may see that change, but in terms of on a standalone basis, these markets will continue to show growth.
Fair enough, Ashish. And a last question, on pegfilgrastim, with one of our competitive biosimilars likely to see the on-body injector, launch sometime in the course of the year, does that impact our ability to take incremental market share? Do you see some of the biosimilars probably shifting to the on-body injector along with the innovator shift?
Well, see, pegfilgrastim US has been a very, it's a very different market. Innovator action has been very unique, where we've seen the very aggressive pricing behavior on behalf of the originator. So that's one aspect. So it's a very different dynamic that we're seeing there. We also had said in the past that given the pandemic, which was an unexpected, unprecedented event, the on-body injector held on to a market share which was disproportional for a period of time. It even went up beyond 56, 57%. But we are now seeing that come off to about 45 or lower than that. So you're clearly seeing that it's certainly a nice to have. The originator continues to hold that market share. Competition that you referred to just now is likely to eat into that market share, but will also release more into the syringe opportunity, which we believe will be for us to look at. Some of the indicators that you will see from the recent market information that have come in is many of these market shares that have been lost by by players who had taken away aggressively, who had gone for market share, has actually now started to lose that in the syringe market. And we're seeing that pick up in Biocon Biologics. So we will see a steady increase because we've always looked at holding on to a value maximized opportunity rather than just chasing market shares, which always put ASPs versus market shares at loggerheads. And we've always played that balancing act also. We continue to do that.
Understood. Thank you so much, Jayesh.
Thank you, Neha. We'll take Nihal next.
Nihal, you are on mute if you're asking a question.
Hello.
Yeah, go ahead.
Yeah. Good morning, everyone. Actually, I want to speak in Hindi so everyone can understand. Yeah, actually, मैं last 1 साल से invest हूँ इस company के अंदर और continue मतलब जो share price है regular मतलब continue downfall और 52 week high और 230 तक आ चुका है और बहुत ज्यादा मतलब सभी इन्वेस्टर मैं तो सफर कर रहा हूँ लगभग 10,000 की होल्डिंग है मेरे पास 400 रुपए से लेके और अभी 230 रुपए के अराउंड आ गया है और आज भी मतलब 52 वीक लो की तरफ चल रहा है। तो आगे क्या प्लानिंग है, क्या स्ट्रेटेजी है, इन्वेस्ट करें नहीं करें, मतलब बहुत ज्यादा सफर लॉस हो रहा है शेयर होल्डर जिसने भी इन्वेस्ट किया है बायोकॉन के अंदर, इसके लिए क्या प्लानिंग है कंपनी की?
देखिए, आप तो देख रहे हैं कि हमारा बिजनेस अभी बहुत मजबूत हो रहा है और
शेयर
आपने
प्राइस
तो
बहुत
देखा
डाउन
है।
हो रही है।
हाँ, लेकिन हम कुछ शेयर प्राइस में हम कुछ कर नहीं सकते हैं बिकॉज हमारा ये समझने का है कि वी विल फोकस ऑन बिजनेस डिलीवरी, बिजनेस ग्रोथ। अभी हमने ये बड़ी एक्विजिशन भी की है जिससे शेयर प्राइस और इन्वेस्टर्स को मुझे उम्मीद है कि उनको समझना चाहिए कि हमारा ये बिजनेस अभी ग्लोबल बिजनेस बड़ा हो सकता है और हम बहुत ही मेहनत कर रहे हैं कि ये बिजनेस में हम काफी ग्रोथ दिखाएंगे, काफी सक्सेस दिखाएंगे। लेकिन आप इन्वेस्टर्स को भी मानना चाहिए कि ये बिजनेस ठीक है, ये अच्छा है, दुनिया के लिए अच्छा है, इंडिया के लिए अच्छा है और हम जो कर रहे हैं, कितने कंपनी कर रहे हैं मैं पूछना चाहती हूँ। कितने कंपनी इंसुलिन बना रहे हैं, कितना कंपनी बायोसिमिलर्स, वर्ल्ड क्लास बायोसिमिलर्स बना रहे हैं। तो ये तो हमारी मेहनत से हुआ है। हम बहुत ही चाहते हैं कि दुनिया में ये ऐसे मेडिसिन लोगों को एक्सेस हो सकता है और यही हमारा बिजनेस पर्पस है। लेकिन इन्वेस्टर्स को भी इसमें बिलीव होना चाहिए ना।
डेफिनेटली, एक्चुअली आप जो कह रहे हो बिल्कुल सही है, पर मतलब फिर भी कोई ना कोई रीजन होगा ताकि ये शेयर प्राइस कंटिन्यू डाउन हो रहा है,
तो
मतलब
मैं तो
स्टेबल
कुछ
हो
नहीं
रहा है।
कर, मैं शेयर प्राइस को मैं कुछ नहीं कर सकती हूँ, मैं सिर्फ मेहनत कर सकती हूँ। और आपने तो देखा है 36% ग्रोथ हमने दिखाया है, हमने $1 बिलियन का एग्जिट ट्रेजेक्ट्री की हमने वो दिखाई है हमारे बायोलॉजिक्स बिजनेस की। और हमारे सब बिजनेस बहुत ही अच्छे चल रहे हैं। आपने सुना है इस कॉल, ये जूम कॉल में, कि हमारा जो जेनेरिक्स बिजनेस भी बहुत ही अच्छा चल रहा है, हमारी रिसर्च सर्विसेज बिजनेस बहुत ही अच्छी चल रही है। हमको भी समझ में नहीं आता है कि क्यों हमारा शेयर प्राइस कम है, क्योंकि मुझे तो ऐसा लग रहा है कि मैं तो सब कोशिश कर रही हूँ, लेकिन ये शेयर प्राइस क्यों इतना कम है मुझे भी समझ में नहीं आ रहा है।
डेफिनेटली एक्चुअली आप मतलब इंडिया की फर्स्ट लेडी जो मतलब इतना मतलब इंटरप्रेन्योर मतलब आप बिजनेस कर रहे हो, तो ये सैल्यूट है आपको। बस अभी उम्मीद है आपने जो कमेंट्री की है उसके कारण से हमारा बायोकॉन का शेयर प्राइस मूवमेंट में आए और एक अच्छा आप मूव इन्वेस्टर को मिल सके।
जी, मैं चाहती हूँ कि इन्वेस्टर्स और मार्केट समझ सकते हैं कि हम क्या कर रहे हैं और हम लीडरशिप कैसे हम हम बिल्ड कर रहे हैं। ये सब हम बहुत ही एफर्ट कर रहे हैं और हमारे दवाई से बहुत लोग को फायदा हो रहा है पूरी दुनिया में। और हमारी जैसी कंपनी एकदम यूनिक है भारत से।
जी जी, इसीलिए इन्वेस्ट किया, 1 साल से इन्वेस्टेड हूँ पर कंटिन्यू
तो
लॉस सफर कर रहा
मुझे
हूँ मैं।
आशा है कि 2-3 अभी बहुत जल्द से जल्द मुझे आशा है कि ये इन्वेस्टर्स हमारी बिजनेस समझ सके और हमें सपोर्ट दे सके।
डेफिनेटली आपकी पॉजिटिव कमेंट से क्या पता आज से मूवमेंट स्टार्ट हो जाए शेयर का। थैंक यू वेरी मच।
थैंक यू।
Thank you, Nihal. We have a follow-up from Cinderella from JMFL.
Thanks for the follow-up. Siddharth, this is for you. You helped us understand the pipeline, especially on the peptide side. Want to understand the commentary on the profitability, EBITDA margin side. How should we look at it? And what is the, if any, guidance that you can provide on the EBITDA side? We have seen some sequential improvement in this business. However, the formulation business in US still has a lot of pricing challenges. So what is your view on that? And just one more addition to that is the newer facilities which are commissioning, how much of OPEX and depreciation it will add to our P&L over there, and is it something significant that we need to consider?
Okay, so I think let me answer a second question first. The facilities, the new facilities are will be capitalized once we receive the approvals from FDA, which is expected in FY25. So I do not expect any significant impact in FY24 from these large facilities or OPEX coming in. I think I'll be in a better position to quantify it and give timelines, I think, as we move along in a few quarters. Now, in terms of the first question, of course, the pipeline, we are making good progress. We do see the pricing impact our EBITDA margins. Core EBITDA margins were in the range of 21 to 22% for the generics business, and we are investing roughly 8 to 9% of revenues in R&D. So that reduces the EBITDA to anywhere around 14-15%, and the PBT which we reported is around 10 to 11%. I do expect the margins to continue at these levels. Of course, the margins are also dependent on the quality or the product mix we supply to our customers. So we've had few very profitable products which were supplied to our customers in Q3. So, for example, fidaxomicin, which we supply to Merck, or tacrolimus, which we supply to some of our customers in the US. So we had seen a good product mix in Q3, but going forward, of course, these could be lumpy. In some quarters, there might be no delivery of higher profitable products. So we would see a fluctuation, but on a long-term basis, I would still say that we will, till we get one of these blockbuster peptide, we will expect the margins to continue in the same range.
That's very helpful, Siddharth. And coming to just a confirmation on Serum, whenever the transaction is cleared from the regulatory aspect, we will be able to see the booking from 1st October 2022. Is that understanding correct?
That's correct. The effective date would be October 1, once the court
Yeah,
approves.
and as ma'am highlighted, the tracking of $300 million is as per the agreement. That is also clearly understood, right?
Yes.
Any additional capex on both the side that we are seeing? Because I see from a generic business side, you have highlighted we may need to double peptide, but any capex that you would like to give a number on that? And on the additional side, in terms of Malaysia, do we see the second phase beginning, or what is the status there from a capex perspective? That's it from my end.
So generics, I expect capex to be around 700 to 800 crores per year, which includes the incremental capacities on our fermentation, non-immunosuppressant fermentation plants, peptide, as well as the injectable facilities that we are building. And that should continue for the next 1 to 2 years. And over to Chini for Malaysia phase 2.
Cinderella, we're within a guidance of 100 to 150 million capex per annum. This year we have spent 70 million. Most of the spends this year and next year is towards the Malaysia phase 2 expansion.
Thank you so much, and thank you everyone. All the best.
Thank you.
Thanks, Cinderella. We'll take the last question from Utsav Jaipuria. Please go ahead.
Yeah, hi, thanks for the opportunity. So my question was on the Syngene stake. Are there any plans for a further dilution in the future?
No.
Not in the future. We are down to 54.9, but we do not have any plans.
Okay, thanks.
So that was the last question for this earnings call. I thank everyone for joining us today. If you need any further assistance or clarifications, please do reach out to us. Have a good rest of the day. Thank you.